in 15 years, we've gone from the government will ban it to the government will buy it. And that trend continues to happen. You have to take notice, and you've got to start making at least some type of allocation. There's really no excuse for these people to have a 0% allocation to Bitcoin. My newsletter is called Fire BTC. Every week I write about how Bitcoiners can achieve financial independence and how FIRE practitioners can incorporate Bitcoin into their plan. When we hit 100,000 and your 5 Bitcoin or whatever that you're sitting on is now worth a good amount of money, these very high-powered people who have a lot of money, they're subject to the same emotional drag and emotional pull that we all are.
Hi, Trey. How are you doing? Everything fine on your end?
Everything is great. We're in this lull in the Bitcoin market for some reason that defies fundamentals, I think. Unchained's business is definitely correlated to the price of Bitcoin. It always has been. I suspect that will continue for quite a while, which gives me a little bit of extra breathing room to be able to focus on some other priorities and talking to clients that I haven't followed up with in a while. And then working on some other projects and that kind of thing. So it's a welcome relief from the buzz of when the bull market is in full force, or when we've got these like euphoric waves of the price moving up and people are just hammering down our door and trying to make sure they can talk to somebody so they can get their Bitcoin secured before it's worth $1 million a coin or something like that, right? So it's been nice to get a little bit of breathing room, and I think we're probably on the cusp here of the next leg up. We'll have to wait and see, though.
Yeah, it's super interesting how businesses are correlated to the Bitcoin price. Actually, also March was, from a few standpoint, from a podcast, also really low. I mean, there has been some other changes that I have done to the podcast, so I'm not 100% sure if it's correlated. But I've actually just heard it from across the board of businesses and other things like, oh yeah, like the price is kind of unexciting. And I don't know if you also see that with Unchained, but usually the price has to do something up or down, and it's good. Is that something
volatility is definitely our friend. It's better when it goes up, right? People are generally in a better mood. But, when the price is going down and it's going down rapidly, people get the urge to buy very quickly, right? And so there's a sense of urgency that they want to express in getting set up so that they can purchase some Bitcoin and get that initial allocation. We see a lot of like new people coming in with that type of a mentality when the price is going down. But generally speaking, that works the same way when the price is going up as well, and people have an urgency to buy, and they're also worried about making sure that their Bitcoin is fully secured in a way that's going to help them plan for succession and all that as the value of it starts to hit them kind of over the head. When we hit 100,000 and your 5 Bitcoin or whatever that you're sitting on is now worth a good amount of money, you are starting to take these ideas a little bit more seriously, because it can feel like a gut punch that causes you to lose sleep if you don't actually take care of it. So it's a lot of fun either way. We love volatility.
And I want to get into FIRE for the topic of today in a moment. But one thing I'm just curious about that, because I know from some exchanges, for example, Relay or 21 Bitcoin, they're reporting those numbers, and I talked to the CEOs there, and they said when the price dips dramatically, they usually have the highest volumes of buys. So actually for them is when there's a massive dip, it's usually an even better day for them just in the buy volume, and they make they have a fee, and the more people buy, that obviously it's good for the business. Do you see the same thing in Unchained if there's like a dip, but you're not an exchange, so you probably have like somewhere along this? Or are you also an exchange? Did I got that wrong?
Yeah, for our US-based clients, you can buy and sell Bitcoin directly with Unchained, right? And so you're buying the Bitcoin, and then we deposit it directly into your collaborative custody vault, which is a really nice experience. You can typically act very quickly because we're dealing with wire transfers, and you can keep cash in your account and just be ready to jump on that dip whenever it happens. But you're absolutely right. We see the same thing where people are there are a lot of newcomers into Bitcoin, especially now, who have been kind of watching on the sidelines, and they're, it's a very normal thing for people to watch it go up very drastically and feel a little bit of FOMO, and then they say to themselves, okay, if we get a drop, then I'm going to start allocating a little bit, right? And sometimes that works out for people, and other times it doesn't, right? Because the price doesn't quite drop down to where they actually want to buy. Sometimes your emotions get the best of you. It's dropped down from 100,000 to 80, and then you're like, okay, well, I'll buy it when it goes to 70, but then it maybe never goes to 70, and you miss out on your chance to actually start that allocation. So different people have different ways that they approach that initial allocation. What I typically tell my friends and family when they're asking me about Bitcoin and starting to think about it is, hey, just like whatever the price is today, you've made that decision, just buy half of whatever you're thinking about buying right now. This is not financial advice. It's just what I tend to tell people, right? Is that this threads it threads the needle on making sure that you get allocated right away, but then can deal with the volatility with the other half that's happening there. Then just dollar cost average that over the course of 10 weeks or whatever you're comfortable with doing, so that if the price does go against you after you've made that first purchase, you don't feel like you've fully missed out on that opportunity. Or if it goes up, after that initial purchase, you at least have some of that allocation in there, and you can enjoy the increased purchasing power that you get from having that allocation. So I think that strikes the right balance. But everybody's different. If you're really running the numbers, a lump sum almost always makes the most sense. You could say the same thing for buying in the stock market, right? There's these regression analysis that have been done in the past that say the same thing, is that you're better off just lump summing when you've got some kind of cash available there. But that's emotionally difficult for a lot of people. It's emotionally difficult for me, and I've been around this for a very long time, right? You just don't want to be in that situation where you feel distraught about the fact that, oh man, I bought this and then the next day it goes down by 30%, which is somewhat likely to have happen.
It's super interesting, the emotional and the mental game of investing. And I saw it so many times with myself when I was picking stocks. Now with Bitcoin, it's easy. I just get paid in Bitcoin, and I have to convert this Bitcoin in fiat when I need fiat, which made investing in Bitcoin super easy now.
Yeah.
But when I picked stocks, there was this which price do I pick? And how much do I do? And what is my diversification across different stocks? And I saw so many friends of saying, oh, I want to buy that stock at that price. Then it reached that price. And then because the stock was in a crash, there was bad news coming out. Then they were not sure anymore about their thesis. And I think the same thing is happening with Bitcoin. It crashes from 100K to 80K. People are like, but maybe it's now going to zero. I'm not so sure about my thesis anymore. It's super interesting, the mental game around investing.
Yeah, and very seasoned and wealthy people, allocators, are not immune from this either, right? You might think that, oh, we're the plebs here, and we're not necessarily allocating millions of dollars or tens of millions or hundreds of millions or billions of dollars to Bitcoin, but the same emotional pulls are happening with these people as well. I was speaking to a group of attorneys and wealth advisors who manage the finances and the overall infrastructure, personal finances and estate plans and that kind of thing for billion-dollar family offices, billion-dollar families, this past weekend. And they have all of the same questions about Bitcoin, all the same concerns around volatility that all of us have had from time to time. And they're starting to think about this allocation. It was a very electric conversation, and there are a lot of questions brewing, but they're all the same questions, right? There's not, even though I'm in this room full of very sophisticated capital allocators and advisors and people who work with these very wealthy families on a day-to-day basis, and they have very complex setups for their estates, the same questions continue to arise as people are new to Bitcoin. They're trying to understand what is the utility of Bitcoin? Like, why should I even pay attention to this at all? Like, what is the regulatory landscape? A lot of those questions have been answered in the last few weeks, and really that risk factor has been essentially neutered with the recent U.S. administration. And then it's about volatility, right? And then it's about what is the opportunity? What kind of position sizing should I actually have as I think about incorporating this into the larger profile of an investment portfolio? And so, these very high-powered people who have a lot of money, they're subject to the same emotional drag and emotional pull that we all are. And when you start thinking about this from a FIRE perspective, that's why this idea around dollar cost averaging and automating your investments or automating the savings that you're doing is so powerful. Because as you were saying, if you are sitting on a piece of like a mountain of cash or a little bit of cash, and you're thinking about, okay, where do I put this? Now, all of a sudden, you're starting to introduce emotion into the process, which you just can't help but do. Whereas if you automate that process, if you're getting paid in Bitcoin, you've kind of got this automated process of dollar cost averaging. You don't have to think about it. And if you don't have to think about it, then the emotion is kind of stripped away and allows you to allocate on a regular basis and in a way that feels more comfortable and feels more emotionally acceptable to most people.
It's also the switch from thinking in Bitcoin and Satoshis versus thinking in US dollar. I saw that over and over again where people feel down if their investment is down and their Bitcoin is down in US dollar, and they feel really good about themselves and feel like, oh, like we did something really good if the Bitcoin price is going 30% up. But the truth in the end of the day is you have Bitcoin, and if it's going down 30%, you're not dumber 30%. And if you're going up 30%, you're not smarter 30%. It's just the paper value of your Bitcoin is going up and down. And you might be able to buy more and sell or buy less from your Bitcoin. And the purchasing power is also, of course, in there. But it doesn't say anything about yourself. And I think a lot of people take what they are worth on paper, what they're worth with their Bitcoin and how many Bitcoin they have, really personal. You definitely have that security. And I'm really interested in that mental game and in that emotional investment in your own Bitcoin stack from Bitcoiners, because I've seen it all over again in the community.
One thing that I found for me personally and for the people that I talk to about this stuff is that actually when the price is going higher, it's ripping higher and there's a lot of enthusiasm in the market and on X and like all of this stuff, it's actually much easier to allocate large amounts of capital because you feel like you've got this FOMO kicking in and you are more action driven to just make sure that you get that allocation happening. And when the price is going the opposite direction, people start getting scared. So even though when the price is ripping and you're allocating larger amounts of capital into this thing, even though it might not work out and go against you, you actually end up a lot of times with more sats at the end of the day than if you had been quote unquote smart and waited for a pullback. Because when that pullback inevitably happens, at that point, you're no longer feeling so confident about putting in this larger amount of capital, at which point you're going to miss the boat again, right? And just not have that capital allocated at the appropriate time. So I've found, at least for myself, that it's kind of okay to lean into that FOMO and that enthusiasm because it allows me to get a larger allocation than I would otherwise have when it's much more difficult to push the chips into the table when the price is crashing to 25,000 or something like that, like it did a few years ago.
And then there's always this memes coming out when the Bitcoin price is dipping and everyone's like, oh, buy. And I'm like, I don't have fiat. With what?
Yeah.
I cannot do anything.
Yeah. It's painful. It definitely could be painful, but it's also exciting, and if you understand the use case for Bitcoin, the utility that I was talking to these family office representatives about, and you understand that this volatility is natural and is actually inescapable if you're talking about an asset going from 0 to 2 trillion to $100 trillion or wherever it will end up going, then you can sleep a little bit easier. So as long as you're, and especially if you've got that dollar cost averaging function in place, either from getting paid in Bitcoin the way that you are, or just from taking your paycheck and a certain portion of that works within your personal finance situation, and it's just kind of automatically happening, you're gonna take advantage of those price drops without having to feel like you have to think too hard about it and overcome the emotional barriers that come with that volatility.
One thing that is really connected to that, on which we also want to talk about today, is FIRE and retire on Bitcoin. So FIRE meaning the financial independence, retire early, if I got that right, and basically the retirement on Bitcoin topic, because it ties into personal finance a lot. For the people that aren't aware of FIRE, what is FIRE and what is the FIRE community all about?
Yeah, you got it right. It stands for Financial Independence, Retire Early. It's a movement that was kind of started in, I don't know, maybe 10, 15 years ago. One of the key influential figures is a guy by the name of Mr. Money Mustache. And he had this blog talking about how you can basically save money very actively, very proactively, be very intentional about the money that you're spending and making sure that you're living somewhat frugally and not wasting money on stupid stuff that doesn't actually add value to your life. And then taking whatever excess savings that you have and investing that as quickly as possible, as much as possible. And primarily the vehicle that is used by the FIRE community traditionally is the stock market index, the total stock market index. You're not necessarily picking stocks and trying to pick winners and losers. You're just buying all of the companies that are based in the US. And the US market is a very important aspect of this because the US has historically outperformed the international stock markets because the US has the tailwinds of being the global leader from an economic perspective and really came off of the industrialization that happened going into the 1900 and through the First World War, that was kind of built off of the gold standard in my mind, right? It's that you have these incentives in place that encourages savings, you have free markets, and that led to this massive increase in capital and a spirit of entrepreneurship and inventiveness that created the world that we're still enjoying today, right? Like all of the seeds of the big inventions and the massive amount of progress that has been made over the last 100, 150 years were, those seeds were planted in the late 1800s when we were kind of on the classical gold standard. And this incentive structure of saving and investment and capital accumulation was really taking hold. We've gone away from that, but a lot of the momentum that was created from those seeds being planted are still being sown, right? Like we're still benefiting from the fact that we created this environment where the US would be the global leader. And the financial system has morphed in a lot of different ways. We're no longer on a gold standard. That ended in 1971 when Nixon closed the gold window. And since then, we've been in a credit-based economy where you're continually needing to expand the amount of credit that is in the economy, and that credit acts as money at this point in time. U.S. Treasuries sit at the foundation of the financial system, and credit, like bank deposits, act as the payment mechanism that we all use. And that's what drives prices, is this increase in credit that has to happen because this is all debt-based. And if you don't increase the credit, then you end up with this downward pressure of deflation as the debts come due, but there's no new money to actually service both the debt and the interest that is attached to that debt. What that means is that the FIRE community has tapped into kind of a truism of the way that the financial system works and the way that the markets work, which is that the stock market is always going to go up, and it's always going to go up because you've got, productive companies that are accumulating capital, but they're also benefiting from this tailwind. And in reality, they're mostly benefiting from this tailwind of an increase in the money supply, that M2, that bank deposit money that is out there, that is feeding into their bottom lines and causing the valuations to grow in dollar terms, regardless of the fact that they may not be profitable. They may be fueling a lot of that growth on debt and this expansion of credit that's happening. So bringing it back around, you have a stock market index that you can buy, which gives you exposure to the entire US stock market. And historically speaking, it's risen at a value of anywhere from, call it 8 to 10% nominally per year over the last over 100 years. And that just so happens to kind of eke out a little bit of a real return relative to the expansion of the money supply, which is somewhere in the neighborhood of 7% per year. And so if you are aggressively saving, if you are plowing the savings into the stock market index, you are enjoying an increase in wealth relative to your costs that are also increasing, but you're kind of outpacing it in very slim margins. And that allows you to become wealthy and to get to a point where you no longer have to work, because you can start to live off of the returns that you're generating in your portfolio. So the approach that the FIRE people take is intentional spending, live like somewhat frugally, and take any excess savings that you have and plow it into the stock market index and build up a portfolio that is large enough to support the expenses that you have on an annual basis. And based off of the historic returns that the US stock market has generated, you can do that with about a portfolio that's about the size of 25 times your annual expenses. And the inverse of that is called the 4% rule. In other words, you could live off of 4% of the value of your portfolio on an annual basis by selling down that portfolio. And at the end of a 30-year period, you actually are more likely than not to end up with a larger nominal portfolio value than what you started with. So you can reach this early retirement, live off your portfolio, and go do whatever you want to do, right? You can quit your job, you can go work on a passion project, you can travel the world. It's totally up to you. But the important point is that you've reached financial independence. You're no longer tied to a particular paycheck, and you can live off this nest egg that you've built in the form of a savings portfolio.
Super interesting. Except that the FIRE community is still very feared, just from the fundamentals or from the principles that they teach. It's very Bitcoiny, for lack of a better word, Bitcoiny. But live within your means, be frugal, stack consistently. If you have stacked enough, you can live your life, and you can take a small portion of your stack and live from that and be independent and use your Bitcoin. So those are all concepts and principles that are really popular actually in Bitcoin. Now, the interesting question is, how does the FIRE change when you mix in Bitcoin?
Yeah, so you're hitting on exactly right. There's this overlap in the approach that the FIRE community has that Bitcoiners kind of naturally have, because they're starting to denominate their lifestyle, or they're starting to use Bitcoin as their unit of account, and recognizing the opportunity cost that you have for every dollar that you're spending that you're not saving in Bitcoin, which is growing at a much faster rate than the stock market is. So my newsletter is called Fire BTC. Every week I write about how Bitcoiners can achieve financial independence, and how FIRE practitioners can incorporate Bitcoin into their plan. And it was based off of this post that I published back in, I think it was March of 2023, called Bitcoin is FIRE Friendly. And Bitcoin is FIRE Friendly was really built around the dynamic that you're talking about, which is that FIRE practitioners actually they intuitively understand a few core truths. One is that the financial system is not really what it seems, that it's actually built on credit and not based on money, that life continually gets more expensive. And then in order to combat that, you need to invest. You can't just save money, right? So these are all things that the FIRE community intuitively understands, and they choose to use the stock market index as their preferred vehicle for outpacing that increase in living cost, and then achieving financial independence earlier in life than the traditional retirement age of 65. When you incorporate Bitcoin into your FIRE plan, you now have a path for accelerating that early retirement or achieving financial independence in a much you're accelerating it to a point where you can actually reach that financial independence much earlier in your life, because Bitcoin is growing at a much faster rate. But it requires that you actually understand what Bitcoin is and what the utility is, and it requires that you understand how to deal with volatility and all of this. What Bitcoiners do is recognize that Bitcoin is the apex predator of store of value assets, and that by incorporating it into a FIRE plan does give you this path for accelerating financial independence. So if you can recognize this, and if you can find the proper balance of having a stock portfolio and a little bit of Bitcoin, at least as you're getting started, you can actually start to get to that financial independence and that early retirement in a much quicker way. It also, if you the more you allocate, because of Bitcoin's historic growth rate, and because it might continue to grow at that faster rate, it actually allows for you to live off of maybe a smaller starting value. This is kind of the other side of accelerating this financial independence journey, is that you actually could save up a little bit less before you can reach that goal, as opposed to saving up the same amount as what you would be targeting for a stock portfolio, but then just having that grow to an extraordinary amount of money by the time that you were to pass it on to your family members.
That's super interesting. Also that 4% rule, just so that I got it right, 4% means you can use 4% of your complete stack and basically live off that from an annual expense. So the FIRE target in that case would be you take your annual expense. Let's say it's 40,000 a year. Then you would need $1 million in a stack to actually be able to. It's an interesting rule because it's also kind of conservative. I don't know if you've mentioned, but I've heard that you said like you can pump the number of 4% to 8% when you use Bitcoin. That comes from you, right?
Yeah. So in a recent issue of the newsletter, I explored in more of a qualitative way as opposed to a quantitative way as to like, what does it mean for Bitcoin's growth rate to be so much higher than stocks if you're incorporating that as a large percentage of your portfolio? And just being very conservative, Bitcoin has historically grown at 50 to 60% per year. It remains to be seen as to how quickly it will grow going forward and what that curve is going to look like. But if we're very conservative and just say, instead of Bitcoin growing at 7% like it does in the stock market, it grows double 7%. Well, that does imply that you could actually withdraw double the amount for the same portfolio value. So instead of having 4% rule, you could actually have an 8% rule. Now, the biggest risk to this is Bitcoin's volatility. So there's something called sequence of withdrawal risk. And if we put Bitcoin aside and we just think about the stock market, if you were to reach your financial independence number in September of 2007, and then by April of 2008, you have retired and you're starting to draw down 4% on your portfolio, the stock market got cut in half over that next year, right? What that means is that you are now withdrawing a 4% of your original valuation, which let's call it $1 million for each 40,000 that you are spending. Well, if that $1 million very quickly drops to being a portfolio only worth $500,000, all of a sudden your early retirement is in jeopardy because you're selling down these assets at much lower valuation, and thereby you're actually living on maybe an 8% withdrawal rate. Well, it might take a long time for the stock market to recover and get you back to your original valuation. And when you look at the historic data, that sequence of withdrawal risk is really the one big issue with retiring early and living off the 4% rule if you are starting exactly along those guidelines. And so if you can get past the first couple of years without that big drawdown, there's pretty much no instances in the historical record where you would run out of money after a 30-year period. But there is that risk of the first, call it year or two, where if the market draws down drastically and you've already retired and you're drawing down on a larger portion of the portfolio than you were expecting, it can put that retirement at risk. Bitcoin has the same problem or the same issue or the same risk available to it. It's just that the volatility is at a much larger amplitude there. And so you still need, even if you are withdrawing at an 8% rate, you still need to take that into account and have a plan for if the Bitcoin price withdraws by 80% in the next year that after you've retired, that you have some way of maybe supplementing your income or reducing your expenses so that you can weather those first year or two. The reality of the situation is that most people's this is all very plannable. Like you can plan for this type of volatility. You can put some plans in place that allows you to be flexible on the income that you're producing that can supplement these types of years, or plan to go live in a country that has a much lower cost of living for a year while you weather the storm. It's a kind of a perfect opportunity to see the world and accomplish this other goal of making sure that your retirement can last. But if you're just going strictly with the 4% rule or the 8% rule when it comes to Bitcoin, you do need to be cognizant of this risk, which is that if the price draws down very drastically in the first year or two of your retirement, it might be put at risk. You just got to have a contingency plan in place.
Let's take a break for a moment and appreciate the beauty that Coin Vigilante has made with the Bitcoin watches. Those watches are the most amazing, the most elegant way of showing that you are a true Bitcoiner. And Coin Vigilante just dropped a completely new and amazing Genesis edition of their watch collections. You have the date of the first ever mined Bitcoin block in there, and of course also the block height and which epoch we are currently in. I love the level of detail they put in this masterpiece. Make sure to check out those amazing Coin Vigilante timepieces down in the descriptions. I love those watches so much. And now if you have Bitcoin, I really do hope that you don't have it on exchange. But if you do have it on exchange, I have two ways for you to deal with that. The first way is you put it on a hardware wallet. That's the entry for you to get into the self-custody game. I recommend BitBox, Bitcoin only edition for that. It's a super simple and secure way. And if you check out the link in the description, you even get 5% off if you use the code Robin. And the second way is the Bitcoin Way. The Bitcoin Way is your all-in partner in terms of how to get the most out of your sovereignty. They will personalize for you a self-custody setup that is perfect for your individual situation. They will show you how you can secure your own devices. Securing your Bitcoin is not enough. You also have to keep all your devices secure. One topic that is overlooked often is the inheritance plan. What happens with your Bitcoin once you are no longer here? Do you have a plan for that in place already? And last but not least, if if you're in jurisdictions where you don't feel safe, it's better to get a plan B. For all that, head over to thebitcoinway.com/Robin to get a 30-minute free call. And just a quick side note, I will be for the first time ever speaking at the Bitcoin Prague event in June. It will be absolutely legendary, and I'm really looking forward to seeing all of you there. You can get your ticket in the link down in the description of Bitcoin Prague, and very important, use code Robin to get 10% off your ticket. I'm really looking forward seeing you there. There's also one aspect that I always like to bring up. I couldn't sit around and do nothing, even if I had financial independence, and I don't, but if I had that, I would still do probably what I currently do with the podcast because it's just so fun. Maybe I would do it less professional and don't care about thumbnails.
Yeah, most people are like that, right? They've got some type of passion that they would like to pursue if it weren't for this pesky job that takes up, 8 to 10 hours of their day, right? And so, and especially today, there are so many different ways that you can bring in an income that doesn't require you to be going into an office and sitting in a cubicle and working like a traditional job to cover at least some portion of the expenses that you've got. And in doing so, it makes the portfolio that you've got that is covering the rest of your expenses that much more conservative. So there's a lot of different flexibility that you can put into your particular plan. And ultimately, it is a personal decision as to how you approach this. That's the way that I talk about this, right? Is that, there's some guidelines that we can put in place, the 4% rule or the 8% rule if you're incorporating Bitcoin. But ultimately, you've got to figure out what works best for you, and based off of the opportunities that you've got and the expenses that you want to have and the retirement that you want to create for yourself is all going to affect how you think about the amount that you need to save and what your asset allocation is going to be and how you're going to manage all those different aspects.
So the rule basically would be, do you have enough Bitcoin to support 1 year of expenses with 8% of your stack? And are we currently in a bear market? So if you're currently in a bear market, you can still do it. It might actually work out. If you're currently at the bull market, let's say we rally end of the year to 250,000, and then you reach that point, it might be a risky point because maybe we crash down to 120K again, and all of a sudden your calculations are not working anymore.
Yeah, there's a number of different ways that you can kind of adjust the math to make it more conservative, right? You could think of it in terms of, okay, instead of an 8% withdrawal rate, I'm going to just target a 6% withdrawal rate, which means that I've got to save up a little bit more, or the price of Bitcoin has to go up a little bit more before I can retire. But that's going to make it more conservative, which allows you to not be as exposed to that first year or two of a price drawdown if that were to occur. You could also think about valuing the Bitcoin that you own at something other than the market price. So if you look at the 200-week moving average, it's sitting somewhere in the neighborhood of like 44,000 or 45,000 right now. So if you ignore the current market price and say, okay, I've got this Bitcoin stack over here, and I'm just going to, instead of applying a market valuation to it, I'm going to apply a 200-week moving average valuation to it. Well, now all of a sudden, you've got probably a lot further to go in order to actually reach that FIRE number, but you're massively reducing the chances that you're going to end up in a more risky situation when it comes to this sequence of withdrawals that you're having to deal with. So, I tend to approach things in a very conservative way. I still use the 4% rule as my guideline for my personal Bitcoin stack and mix of some stocks that I have left over from a previous life, right? And to me, that makes a lot of sense because, I kind of am already at that number. So why draw more than I need to? I'm probably going to be selling down any stock that I own before I'm even touching the Bitcoin. So I'm in a very conservative position relative to all of this. But if you're just now starting out, and you're trying to figure out, okay, what's the target that I need to get to? How quickly do I need to be saving? You can take some of these other dynamics into account.
That's where I think is most of the value. You want to have a savings goal and you want to have a plan in place what you do with your finances, because you want to have financial stability and security, but you also want to be not die with the most Bitcoin you ever had. so I mean, if you want to pass it down to your kids and have generational wealth or just give it to charity, that's something really cool. And that's something very charitable to do. I respect that. But if you say, okay, I worked hard and I also want to have something from the fruits of my labor, maybe it's a good way of saying, hey, now I have that stack, just mapping out how many years I have left to live. Maybe I'm 50, just calculating, I have about 40, 50, 30 years to go. Maybe it's actually a good idea to get some off my Bitcoin stack and start living my life. And like you probably already lived, but start enjoying things that you wouldn't have enjoyed before, if that makes sense. Or maybe take some less work, whatever you want to do with that. There's like no limits to that. But it's an interesting anchor point that maybe makes it easier to manage personal finance, I guess.
Yeah, well, it's very encouraging when you start this process and you're calculating what your number is, and then you're mapping where you're at and what your status is or your progress relative to that number. After you start doing this for a 6-month period or a year or 2 years, you start seeing that number trend toward your goal. And it's pretty, pretty encouraging and allows you to kind of lean into it more and say, hey, this is actually working. Like this plan is actually working for me. And now I can start to see, okay, it's going to take me 5 years to reach this goal. Now you've got like an end in sight, and you could start planning for what the next phase of your life is going to look like. Some people love their job and they don't plan on ever leaving it. But having that financial independence puts you in a position where you don't have to worry about whether or not this company that you work for or this job is actually there. If you were to lose it, you're totally fine, right? You can cover your expenses. And then to your point, life is short. You never know when the current day is going to be your last. And you should find this balance of being able to enjoy the fruits of your labor, to be able to like experience life and go travel if that's your thing, or go play a lot of golf if that's your thing, or whatever the case may be. We shouldn't be necessarily just living to work, right? We should be working to live. And I think that's like the core ethos that the FIRE community brings with it, is this kind of newfound optimism for saying, hey, there's a path for you to work hard, be intentional, save a whole bunch of money, and then put yourself and your family in a position to really enjoy life, as opposed to just being stuck in a cubicle all day.
What have you learned from the FIRE community that you miss in the Bitcoin community?
I don't know that there's much there, to be perfectly honest, right? Like I
love
think,
that.
So, we talked about it a little bit before, that the Bitcoin community kind of naturally is inclined to save more and to find ways to stack more sats, because they very explicitly understand the opportunity cost that comes with not owning Bitcoin. The FIRE community there's still a lot of resistance to Bitcoin for whatever reason. I think it's just, kind of a follow the leader type of thing, where these influencers have poisoned the well to some degree and not had an open mind. And they are, just kind of appealing to authority in that regard, right? Like Mr. Money Mustache, I mentioned him before. The very first issue of my newsletter started off with quoting a blog post that he had back in 2018 called Why Bitcoin is Stupid, right? And I don't think he's changed his tone on that. I don't see any reason that he would. There's a lot on the line for kind of flip-flopping on an important issue like that that's garnered so much attention. But, I think the Bitcoin community has a really great ethos of making sure that their own personal incentive structure is mapping to the reality of what Bitcoin provides to the world. And what I hope to help them understand is that, hey, you can actually think about this framework that comes from a more traditional approach to finances, bring that into the way that you approach your personal finances, and actually have a plan that you can work toward to reach a goal that gives you some structure around, hey, when can I actually retire? Which is a pretty interesting question that a lot of people bring up in the Bitcoin world. I think they just don't have necessarily like an actual framework with which to think through that question and realize what is enough. How much do I need to stack to actually reach that goal?
And it's for me, when I see the FIRE community, and I'm not deep in there, but I have seen a lot of posts around that. I see some similarities actually with the Bitcoin communities when it comes to how we should do the financial behaviors like DCAing, the concept that I teach. I like those concepts and principles a lot. And it's interesting why they are so heavily on fiat. As you said, like with the leaders and influencers can bring a big burden on a community. And I really like that about Bitcoin, where the slay your heroes and this first principle thinking and this critical thinking is really in the community, and it's not like, oh, Seyr says that, now the whole community is going there, or like someone says that and the whole community is there. So I think that's maybe something the FIRE community can learn from Bitcoin. Slay your own heroes and think for yourself critically. But I see in many ways Bitcoin and the Bitcoin community as a new FIRE community, like FIRE 2.0 or whatever you want to call it, because a lot of people that listen to Bitcoin podcasts and implement the Bitcoin philosophy of living below your means, DCAing, they will be not only retire on Bitcoin, they will probably be really wealthy because of Bitcoin. And this is a community that holds together and then actually benefits the ones that are in there. So I do like your approach of like connecting those communities and maybe showing the FIRE community that there is like a FIRE 2.0 that they might want to join.
Yeah, I've seen some signs of life over there. I've pulled back from being in the weeds with the FIRE community to some degree, just because, they don't. There's not much that they're going to contribute to my pursuit of stacking as much sats as I can in order to reach the goals that I have for myself and my family, right? But I think, number go up technology is the key thing that brings everybody to Bitcoin. There's a certain point, I think we're at that inflection point now, where you just can't really ignore it, right? If Bitcoin goes from where it is now today to $250,000, like the FIRE community and those people who have ignored it and followed those influencers and followed Vanguard and the Bogleheads as saying, oh no, we're not even going to support a Bitcoin option within our company. If as and when that happens, you just can't ignore that you missed the boat on this particular thing, right? And so that open-mindedness to actually explore something that has been around for quite a while, in 15 years, we've gone from the government will ban it to the government will buy it. And I think when that continues to happen, or that trend continues to happen, you have to take notice, and you've got to start making at least some type of allocation. There's really no excuse for these people to have a 0% allocation to Bitcoin. Whatever you are going to feel comfortable with from an allocation perspective, that's a personal basis. It definitely is going to be volatile and something that you have to wrap your head around. But that volatility can be managed with proper sizing. But the proper sizing is definitely not 0% at this point.
It boggles me when people still have zero Bitcoin, and it's 99% or like 98% or 97% of people, most people. But the ignorance against that is really mind blowing for me. I get why people might be fearful of going all in like I did, but having some form of exposure is almost irresponsible at that point if you don't have any Bitcoin, like any Satoshis you can now buy it in ETF. You can even buy if you're saying, oh, let's buy some strategy. Oh, it's okay. You have some sort of Bitcoin exposure. I know it's not perfect, but at least you get something of Bitcoin in your life. And I guess if you have S&P 500, there's Tesla in there, you also have some sort of Bitcoin exposure, but it's not good enough. So you need some direct exposure.
Down their throats, right? Like people who own VTI, the Vanguard Total Market Index, they already own MicroStrategy or Strategy because that's included in that index. It's now included in the NASDAQ as well. And at some point, it'll be included in the S&P 500. And so all of the, FIRE community that is just buying these index, they are getting some indirect exposure. And it's only going to continue to grow as more and more of these public companies, these large companies, develop a Bitcoin strategy, whether that's for their treasury or incorporating it as part of their business and the like. So, you kind of can choose to ignore it in a proactive manner, but the strategy that you've chosen is going to get you that exposure anyway. Maybe that's a good way to approach it, is like, hey, I'll just let the market come to me instead of me going to the market. You're going to underperform, but maybe that's okay.
Has Bitcoin changed your financial behaviors?
Well, when I started on my FIRE journey, I took it very, very seriously. So I incorporated this frugalness a little bit too much of an extreme, where I was really counting dollars and funneling as much as I could into those index funds. When I really started to understand Bitcoin, I started shifting that savings portfolio or the new allocations toward Bitcoin and buying that much more aggressively. Really, the way that it's helped me is to say, okay, I've got this core position now, which is Bitcoin. That's basically the only thing that I add to. I still have some of these stocks that are out there that allow me to have kind of a contingency plan in that sequence of withdrawal situation if I decide that I want to retire and stop working and have zero income. But it really hasn't changed my plan other than accelerating how quickly I'm able to actually reach financial independence, which I'm basically kind of already there. And so now I can start thinking about what that post-FIRE life looks like, and shifting my priorities in the way that I spend my time over the next few years toward those things that I want to pursue.
It's an interesting question. What would you do if there is no money problem whatsoever and you can just stand up and do? Is there actually, I talked with that Noah Kaufman, I think is his name, that I talked to. And he has the theory that we are now in a fiat world and we will be in a full Bitcoin world. And he thinks Bitcoin will bring so much abundance that we will at some point come to a no money world, because we're all taken care of and we might be just able to live and do whatever we want and not have to struggle with money. However, this looks like maybe there's still a ranking system and money system. Maybe there is nothing of that at all. Do you think that Bitcoin could bring us so far into the future? And I want to preface a little bit more. One thing is also for certain, if you look now at the average viewer here or the average person in life, they are a lot richer than the richest guy alive 100, 200 years ago. They couldn't went into a plane and just drove flying across the Atlantic. They couldn't phone their families home. And a lot of things that we all can do now wasn't accessible for anyone just a few hundred years ago. So in a lot of ways, we already are really abundant. If you look in the general population, there's a lot of poorness in the world. But do you think Bitcoin will bring us to an abundant world at some point?
I think it can if it is adopted in the way that we expect that it will be. I think that you can go from, if you remove credit-based money and the drag that it has on the incentive structure for production, you're going to get a more productive society with less waste. And maybe in real terms, we're growing at 10% as opposed to 3% on an annual basis throughout the world. Even an increase from 3% to 4%, if that were the case, would have just drastic implications for the living standards and the number of people who are living in poverty around the world. So I definitely think that the incentive structure that Bitcoin brings, if adopted in more of a grand scale, can accelerate the progress that we're making. I am less of a doomer when it comes to what the current fiat financial system has brought to us. Like, there certainly are a lot of issues in the world. We're all very aware of them, but you're absolutely right that, like, even looking back 50 years ago, I mean, people could not imagine the living standards that we have today and the different ways that we're able to communicate, like you and I talking over video halfway across the world from one another, in order to communicate to the entire rest of the world, or anybody who wants to tune in to what we have to say, right? And we are making huge strides in the way of AI. I think that's going to continue. We'll see what limits are going to be reached based off of really the hardware limitations and the energy limitations that we've got in the physical world. But that development is going to continue apace. And then, in terms of in terms of the idea of moving beyond money, that's not something that I believe. Money is an essential part of allocating resources. We have imperfect money that we're using today, which creates, again, this drag on the ability to allocate capital in the most productive manner. But you always need, as long as there is physical world, there will be physical scarcity, and you need these physical items in order to generate physical things that allows us to sustain our bodies in the real world. That requires an allocation of resources. It requires market signals. And the best tool that we have for being able to do that is using money. Even in like this post AI general intelligence type world that people are talking about, you still need to have the ability for these machines to allocate the resources to themselves versus somewhere else in order to create production. So will we reach some type of like post money world? I don't think that's possible or desirable. But I think that's generally it's directionally correct in that we will get to a place where we're just so much more productive, and we'll continue to be able to move in the direction of working less if we would like to. And Bitcoin allows you to get to that place much, much sooner, as long as you embrace the incentives that are kind of inherent with having a fixed money supply. I really think that Bitcoin is that the fiat world, the fiat monetary system, was a necessary bridge from the sound money of the past to the sound money of the future. It's like we got to a point in society where gold just couldn't cut it anymore. And we were accelerating in progress from, on the back of the gold standard to such a degree that it kind of broke the system. And we needed the fiat financial system to provide a bridge from that old world into the now new world that Bitcoin can provide, where you don't need all of this credit in order to bridge the gap between the movement of capital and the needs across the world. So Bitcoin can handle that, and it allows us now to move back into a sound money standard. And we're starting to see the movements along those same lines across the world when it comes to like Doge and the deglobalization that's happening. The current world order is kind of breaking down and it's giving way to a more decentralized, deglobalized type of world order, which Bitcoin fits perfectly into. If you have like a lot of trust in society, credit works fine. But I don't know if you've noticed, but like that trust has been starting to erode a little bit across the world. And so Bitcoin comes in as a neutral money and allows for us to continue forward in this more decentralized manner. And just looking back at the fiat world, it was very helpful to be able to develop those systems to be able to bridge the gap between gold and the new money standard, the new sound money standard, which is Bitcoin.
I tend to agree with you. I have a hard time believing that we don't have a ranking system, keeping tabs system, point system, whatever you want to call it. I just call it money. We need that to progress, to keeping things intact, to keep incentives intact. And there's this idea of, we will find unlimited energy, then we can source the robots, but there's still a lot to do. There's no real passiveness.
Even if you have perfect knowledge, let's say you've got this like global network of general AI that can communicate instantaneously across the world and share information. So you've got this like perfect information, all-knowing type of thing. You still have an ordering problem for who needs what resources when and how quickly. So you still are not able to like instantly transport things from one point in space to another. I don't know, maybe we solve that problem as well. And you can just instantly, in all cases, have everything that you need. I just don't see that as a realistic thing. But maybe my understanding of quantum mechanics and the way the world works is a little bit limited. I'll admit to that.
Maybe we are too boomer to understand it.
Yeah, absolutely. Absolutely.
But yeah, it was a really a cool talk. I asked each and every one of my guests, and I can't remember if I asked you that in the previous episode. I asked now, since a few episodes, every single guest what we can learn from you besides Bitcoin. What would that be?
Oh, what can you learn from me besides Bitcoin? Well, I don't know. You're catching me off guard here. I think, I'm very proud of the way that I've, developed along my career as coming from a Bitcoin, a banker turned Bitcoiner, coming from like the fiat world, the traditional finance world, from the traditional FIRE world to adopting Bitcoin as kind of a primary savings vehicle there. But beyond all of that, I have a beautiful family. I've got 2 young kids who are very active, and I'm lucky to be able to be in their lives and helping to raise them. I've got a beautiful wife. She's there and very supportive of me in this Bitcoin journey and all of that. So, I think the important message beyond just like focusing on what's going on in the Bitcoin world, that Bitcoiners try to break through to the rest of the world and to Bitcoiners themselves is go touch grass and really focus on the things that are important to you in the here and now and for your future. It's not all about like how much can you stack, how much can you put away? Are you going to have enough money for the next 100 generations of your family? Like go out, enjoy the world, experience things, travel, play golf if that's your thing, or develop these hobbies that really allow you to grow into a well-rounded person. Get off of X every once in a while. I have a bad problem with checking the news flow and doing all of that stuff, and part of that is kind of built into my job and the way that I'm approaching what I'm working on these days. But it's important to be able to step back and really take into account the things that are truly important, which is our relationships, our families, our friends, and really just enjoying this life that we have. Because again, you never know when the current day could be your last. You want to make the most of it.
You're playing golf, right?
I'm playing golf as much as I can, which is not all that much when you've got a 7 and 9 year old. But I'm actually playing tomorrow. I've got some golf with a client coming up. I've got another event coming up next month or later this month as well, and trying to incorporate Bitcoin and golf in the best way that I can. To kind of merge these two passions that I have. So we'll see. The weather's getting much better here, so I'll hopefully be able to get out a little bit more.
I've been told it's addictive. I've never been, and a friend of mine and a guest of mine, Daniel White, comes to Prague, and he comes one day early and visits me in Austria, and we record a podcast. And he's like, "Hey, come with me to the golf course." And I was like, "But I've never held a golf thing in my hand, so I'm pretty useless there. But we'll try it." And he warned me.
It's not everybody's thing. It takes a good amount of time. It's very difficult. You need to definitely put in some proof of work in order to get any good at all at it. But that's part of why I like it, right? It's just such a good challenge, both mentally and emotionally and physically. And it's something that you can play, for your whole life, right? You don't have to be in great shape when you're 85 years old in order to play golf. You can still get around and get some good exercise. So I think it's an important skill to have. And we're fortunate in the US where there are golf courses everywhere. I don't know what that looks like in Austria, but in Europe generally, I know they're kind of fewer and far between. But for me, it's a really nice way to spend some time and get some fresh air and get some exercise and challenge myself both mentally and physically.
Is it addictive? I heard it.
It definitely can be addictive. It just depends on your personality. But those legends are true.
Really cool. We have an end routine in the podcast where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And the previous guest asks you the question, what will be the first big nation state to mine Bitcoin?
Russia's already doing it, are they not? I think we already have that. It sounds like the US is already going to be contemplating that. I know for a fact that there are large energy companies that are starting to incorporate Bitcoin into their infrastructure, either as pilot programs or the like. And then we just saw the Trump family make an announcement about American Bitcoin, which is, that's obviously not a government directly mining Bitcoin, but it's pretty close. You've got the administration with eyes on that. So I don't know that the US will directly start doing that, but they're definitely facilitating an environment that is making it easy for the private sector to mine Bitcoin, which is really where it should happen. Russia's already doing it. They realize the importance of being able to access a financial instrument that the U.S. does not control. And so as the U.S. Treasury instruments continue to kind of fade away from being the primary store of value or reserve asset around the world, people are going to be looking for ways to acquire Bitcoin in a sovereign way where they don't have to buy it from somebody else, but they can actually buy it in the form of energy using assets that only they control within their jurisdiction. So we're going to see more people copying what Russia is doing. I don't know exactly who it's going to be. Probably the Chinese, if they're not already doing it, and more like centrally planned type economies who are just taking advantage of the assets that they already kind of own there. That makes the most sense to me as the people who would be adopting mining on a sovereign level.
I haven't heard about Russia. It's so interesting. I have to look it up later. I just tried to research a little bit now, but that's super. I think that every big nation state is already either buying or mining Bitcoin in some capacity, but they haven't told us publicly. so it's like the difference between doing it.
I definitely think the number of those nation states that is doing it is non-zero for sure. And we've already seen some headlines for those, but that's going to continue to grow. I mean, the announcement and the executive order from the Trump administration was really a shot heard around the world. I think, the next day, every president, every central banker around the world got their daily briefing on their desk, and it said the U.S. has adopted a strategic Bitcoin reserve. That's going to create a ripple effect across the world as these bureaucrats and presidents and central bankers consider what the next few years and decades are going to look like, and how they plan for their geopolitical stance relative to the U.S. So we'll continue to see it. The price is not reflecting those fundamentals. It's weighed down by other uncertainty, but I think that's going to change here pretty soon. We'll have to see.
100%. And it's so crazy for me, because if you look at, Bhutan is a very small example. It's half the size of Vienna, and Vienna is very small. But they have been mining from 2019 to 2024.
Yeah.
And publicly announced it in 2024. They're still mining. So they took 5 years to publicly announce. How many countries, small, big, medium size, whatever, are buying and mining Bitcoin and doing it with no public knowledge at all? So I think you're probably makes you think. Right. Will be fun to see. Thank you so much, Trey, for being on. Before I let you go, I already put one time your newsletter in the screen. Where can they find it, and where can they find you on Twitter and stuff?
Yeah, I appreciate that. firebtc.substack.com. I get a new issue out about every week. And then I'm starting to follow that up with little video explainers that are on X. And you can follow me on X at @TS_hodl. I've got a personal website, treysellers.com. It's not overly active there, but you can find some interesting Bitcoin resources and some other links about some of the things that I've been working on. But really appreciate you having me on, Robin. Really enjoy the conversation. Hopefully some people will learn a little bit about FIRE and why it's important for them, personally speaking. And for the FIRE proponents who this may reach, who have not yet considered Bitcoin, it's time, right? Like, get off zero, start learning about this asset. It's going to do wonders for your ability to reach FIRE in a much more accelerated fashion. And check out the newsletter. Hopefully that will help you understand it a little bit better.
Really, I haven't thought about that. Maybe there's some FIRE guy that clicks on that video, and we should have made like a section with like why Bitcoin, but then the podcast will be way longer.
Yeah, there's plenty of resources for that, right? I try to like put it together in the FIRE framework. So we'll see if that resonates.
Absolutely. Yeah. Thank you so much for being on. Also, thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye.